from a strategy standpoint, if you can be active in the business, owning a hotel versus being a GP in a multifamily, there's probably more tax advantages for owning the active business than there is the passive multifamily business.
That is correct. Yeah.
That is true. That is true. That is true. Good morning, good morning, good morning, America and the world. This is Vinney Chopra, Vinney and Beau show with Brother Beau, right there from Las Vegas. I'm in Danville. We got a great guest today. Actually, a very prominent CPA who has been working with, I'm just looking over here, member of the American Institute of Certified Public Accountants, AAICP, uniquely qualified to serve high net worth individuals. Sheikh G is also, I've known him, my very good friend. He's my CPA also, and so forth. And he has been working with high net worth individuals due to 20 years plus experience with Price Waterhouse and KPMG, which is a big 4 CPA firms in USA, Fortune 500 clients, also, and one of the biggest Indo-Pak sole practitioner CPA in the country. I'm really privileged to have Sheikh G, and he's really also very much into real estate side. So he knows the nick and knacks and works with a lot of high IT professionals and all. Sheikh G, thank you for joining.
You're
Thank
welcome.
you.
Thank you. Thank
So
you.
glad to have you. And we are really looking into where the market is. Yesterday, you opened up really something very special. Bonus depreciation, which we used to get, and it was getting to 80% and 60%. There is a big law that passed.
Yeah, so they have extended everything to 27 now.
Oh,
Retroactive to 23.
oh
So
wow. So
23
last
was-
year
yes.
also.
Yes, that is correct. Yeah. So anybody who is going into these big transactions plus adding a lot of assets when they purchase anything or even start anything, they will be still getting the depreciation 100%.
Even for last year, that's
Yeah,
what really surprised me.
for 20. Yeah.
Hanji, 23, retroactive to 23, and it's
Yes,
going until 2027.
that is correct.
100% of CapEx,
Yes.
everything that you're building, and any accelerated depreciation.
As well as
You
whatever you do on cost segregation part.
So bonus depreciation also works with items you buy for your business, not just real estate.
Sure.
Right. So
Yes.
if I own an HVAC company and I buy a work truck, right, for
Yeah.
$100,000, that I can use bonus depreciation or Section 179
Yeah.
on that
Yes.
as well. So
You can use it. Yes.
so
Yeah.
the moral of the
Beautiful.
story, and I always preach this, is everybody should own a business. Everybody should own real estate, because that's how
Yes.
you're going to get the best tax strategies and
That's true.
effectively.
Sure.
No, that
Everybody,
is so true, Bo. Yeah, like you said, we were talking before the show about leasing a building to do some business, but you said, Vinny, we need a real estate part of it for SBA loan, right? You were just explaining to me, or you have to collateralize your personal residence or something you mentioned. But if you own the real estate and the business, that's when you take the cost segregation and all these bonus depreciation, right, Sheikh Ji?
Yeah, exactly. All you can take. Yes. Basically, the depreciation, the way it works is you have 4 walls of the building and the land. Those parts go over 40 years. The land is not depreciable. And the 4 walls go over 40 years. But everything else in between, you can depreciate it right away.
Beautiful. And it's 5-year schedule, 15-year schedule, 27 and a half year in residential, and
That's correct.
39 years for commercial. And
Commercial. Yes, that's correct. Yes.
I'm not a CPA, or I don't play one on TV, but really, Sheik, this is what I think people need to understand. And correct me if I'm wrong. If you're a W-2 employee and you invest in some sort of real estate deal and you're not considered a real estate professional, that does not mean that you can offset your W-2 income.
That is correct. Yes.
So this is why the strategy really is important. Like most people say, oh, you can do cost segregation. Unless you're cost segregation in the right business real estate, if it's an active business like a short-term rental, So most people just think they can take that $100,000 loss on the or depreciation loss on the K1 and offset W2. No, that's why I became an advocate, and correct me if I'm wrong, of business ownership. If I'm a high paid W2 and I own a business, then the equipment I buy and so forth, I can then offset earn W2 income potentially.
Yes. Other thing you can do is maybe your wife, you can make him her active partner in that venture. We have discussed with Vinney hotel part. Hotel is an active part, short-term rental. All these things. Normally what happens is you cannot have technically two jobs, you
Yes.
know, but if your wife or we can justify some hours, 750 hours a year, we can basically offset your W2 in active business, not in passive business.
Correct.
Right.
Correct.
But
Which is very true what you're saying. I'm sorry. Syndication, which I do and everything, and funds, Sheikh G, it's LP and GP. It's
Yes,
set in stone, limited partner. In syndication, the limited partners cannot take the active losses, right?
that is
Yeah.
correct. Yes.
so
Hanji.
this is the biggest thing that I've realized over the last couple years as I've been really learning and listening to CPAs and things. Look, everybody needs to consult with a tax strategist CPA because not all CPAs are corrected or the same, right? Some of them just they don't understand all these strategies, and you're basically leaving a lot of money on the table. I remember years ago somebody told me, "Oh, I made about a little over 4 million and I had 5.4 million in losses," right? People complain about these high profile people paying no tax. Well,
Yes.
look, everybody has the same playing field with the tax code. It's meant for us to understand how to use it, right? There's the only difference is they're taking advantage of what's there for you. So anybody who complains about it, it's really their fault for not getting with the right CPA and learning these tax strategies.
Yeah. Other thing is normally when we discuss with clients, we have clients who are long-term into rental, let's say, and they have paid off a lot of their loans and stuff. So they have a very positive cash flow, as well as
Hanji.
positive income on their,
Hanji.
rental or passive income. So what this does is we give them, let's say, passive losses. They can offset each other, saying that they don't pay tax on the income which they are making from their old rentals they have for 10-year, 15-year, because they are generating passive income. And with this, if we are doing passive losses due to depreciation, so you can offset each other. You know what I'm saying?
That's
And don't
very
pay
true. So
tax.
what you're saying, if I may so they can be having other investments passively owning, and it's making positive cash flow. And if
Yeah, as well as
syndication gives them
positive,
passive,
yes,
Hanji,
as well as
and positive
positive tax income too.
tax
So
income
cash
also,
flow and tax is different.
yeah, that's true.
Yeah.
But they can take positive cash flow from one business or rental property and take the negative from another asset, which they
Yes,
are also passive. They can be combined in that calendar year
that is
so
correct.
that their total passive income will be reduced. Let's
Yes,
just say that,
that
so
is
that
correct.
they
Yes.
will reduce their taxes. Excellent,
Yeah.
excellent.
Yeah.
And many
Yeah.
time I tell my investors also in syndication, because these passive losses 1 year can be carried to the next year and to
That
the
is correct.
next year and to the next year and accumulate it,
Yeah.
because when we sell the property there is a gain because we have to capture the depreciation, and
Yeah.
you can back that total gain with the uh, accumulated passive losses. Hopefully the net result is zero or maybe very little taxes. Am I
Yeah.
correct in that, Anji?
But
Ah,
it depends on the activity.
ach-
If you have one activity with big suspender losses over the year and you dispose that off, then all your suspender losses become like additional basis in the property to calculate the gain
yes,
or loss.
Right.
Yeah, so
So
it
you
depends on the
have.
activity. You cannot
Hmm.
accumulate everything. Yeah, but yeah, if you dispose of that activity which has a lot of suspended losses, then your gain goes down. Yes.
Oh, totally. Because you have to capture all the depreciation losses, let's say,
Yeah.
at the sale. Anji?
No, depreciation losses at activity level. When we give you K1, it's there. Okay. But
Anji.
when you do your individual tax, then you are basically looking, because at activity level, you don't know suspended losses, because suspended losses are at individual level.
I
Okay.
see.
But
Hmm.
individual level, then you can say, okay, I dispose of this activity. I have this much suspended losses which I could not use. Say I have a $2 million capital gain and I have $1 million suspended losses. Your gain is
Hmm.
only 1 million then, so it's not two.
You got it, Beau?
Yeah. Yeah. Really, this is why you need to understand a little bit of this.
Yeah.
So when you're having conversations with your CPA, you
Hmm.
can, this is all part of it. Because a lot of people miss out on the tax part, which is like 40% of the equation. They're always worried about making more money. But what about keeping more money? I think it's
Hmm.
more
Exactly.
important. Like, I want to get off the hamster wheel. How do you keep the most
Yeah.
money? And what are
Yeah.
the strategies around that? That's why I think these conversations, I used to think tax was boring. I actually like it more and more I learn about it. I'm like, this is, it's all
Hmm.
strategy. It's like playing chess.
Yeah.
Hmm.
And you can really, I could go out and buy more equipment this year if I needed to, because
Yeah.
even if I didn't need the equipment, because I want to offset, and then next year I need the equipment. So you can really go in every year with a good strategy to really
Uh,
minimize your tax consequences.
yeah.
You know,
It's pretty good to review your with your CPA on quarterly basis, what you're
Anji.
doing, how your P&L looking at that time,
Hmm.
and what you want to achieve and what you have to do before the year end.
So for business owners, Section 179 versus bonus depreciation, what's the real difference, and why would you use bonus depreciation versus Section 179? I'm a little unclear on that.
Hmm.
Section 179 is basically if you are looking at asset by asset. Okay, I'm going to add this because Section 179 is different for each person technically, because you
Hmm.
have federal level, you have state level. California only allows you 25,000, doesn't give
Okay.
you anything else. But
Hmm.
bonus is like a blanket endorsement. It gives you, okay, you don't have to worry about small item here and there. But it was
Hmm.
179 is mostly if you're adding one or two items, then you can look at it that way. But bonus depreciation is especially when you are in a big venture and you are spending a lot of money. Yeah, so that gives you pretty, what you call it, big deduction. But yes, 179 is basically, it used to be before a bonus depreciation came in. That was pretty big. But after
Hmm.
bonus depreciation, 179 is at the back end now.
I
Got
see.
it.
I see.
Yeah.
Now, the bonus depreciation, the term was invented by Trump. Is that right? President
Uh,
Trump back
it,
then, or no? No.
no, it was before Republican, I think, Bush era.
Okay. Okay.
Because I think since 9/11 and all that happened, then a lot of
Hmm.
activity got stopped. They start giving that one.
I.
But it's the most recent. Yeah, Trump gave a lot of it because he is
Hmm.
into hotel business, so he knows these things, and
Yeah. Yeah.
that's what he was pushing it to. Yeah, but I
Totally.
think with our 2008 recession, this thing became pretty big.
I
uh,
see. I
because
see.
yeah, a lot of people were having losses and nobody was trying to make any money, sorry, investment.
Hmm.
Uh,
Hmm.
so that's what they start pushing it. So it's basically starting from 2008 on, in some
2008, and
shape
it's
or
an
form. Yeah.
incentive, Anji. It's an
Yeah.
incentive for investors to put more money into the property because everything you invest, I think dollar per dollar, you're able
Hmm.
to put it into bonus depreciation because you're
Yes.
writing off capex, every dollar, any upgrades and everything, plus also the 5 year schedule, right?
Yeah.
You could take it right away, and 15-year schedule, if I
Yeah.
remember.
5 to 15. That's the criteria.
That's the criteria,
Yeah.
plus everything invested in that particular year. can be taken total deduction dollar for dollar in as you're doing the filing
Yeah,
the
as long as
taxes.
it's below 15 year.
Oh,
Uh,
below 15 years, not
yeah,
after that. Yeah,
no,
those
not
things
more than
will
that.
stay 27.5 for 39 years for commercial buildings and residential 27.5.
But
So
normally
this
what
is
I'm
it.
saying is those are
And
basically the four walls of the building.
yeah,
Those
yes,
are the
yes,
27.5 or 39 for 40-year basis. But
sure, sure.
everything in between, let's say on a hotel, you have TV in the guest room, you have
Mm-hmm.
furniture, you have
Mm-hmm.
all the fixture there. Sometimes
Yep.
you have standalone air condition in there.
Yeah.
So
Yep.
you can get all those depreciated the same first year.
Totally. All electrical, right? All plumbing,
Yes,
everything in the walls. What you're
that
saying?
is correct.
Commercial
Yeah.
kitchens, dining, bar, everything.
Yeah,
Yeah.
which has a
Oh,
life of 15 year or less, technically.
15 year or less.
Okay,
Beautiful.
I got a question.
Sure.
I find a motel, a boutique motel that I want to buy, but I don't
Mm-hmm.
have the money necessarily. And
Mm-hmm.
some of my friends that are high paid W-2 employees,
Mm-hmm.
we buy it together just as partners within an LLC takes ownership, and then each of us are managing members or our
Mm-hmm.
entities. What do they need to do is there, do they need to materially participate in order to be an active business in order for them to take the advantage of cost segregation off of there to offset other income? Is that what we would deem what we would
Well,
need to do?
first of all, one thing is the business. What is the nature of the business? Okay.
Mm-hmm.
So apartments are basically passive income.
This is a
Hotel,
hotel.
yeah. So hotels are active income technically.
Active
And
income.
then as long as they are putting 750 hours or more a year into,
Much.
the parts, they review the financial, they approve some contracts, they are involved in some capacity. That
Mm-hmm.
is, plus they are GP, so they are active technically.
I see.
And that's what all the losses or any depreciation can be offset against their W-2 income.
So,
Mm-hmm.
but why do they have to? So, one of the tests is 750 hours.
Yeah, that's correct. Yes.
But what if that doesn't? I don't know. I don't know if I really. That's not really a good rule. I don't think because you can
It's
be
for,
active and manage. You can spend 2 hours a month being an active manager. I can be very efficient and delegate.
Mm-hmm.
So that's
but that
kind of
is for a
interesting,
year, 1 year. It's not monthly
Oh, yeah.
right?
It's for the whole year,
for the whole year.
750 hours. But like you
That's
said, if
14
the
hours per month, right? 14
Yeah,
hours per month.
something like that.
Oh, that's not bad. You can embellish a little bit.
Yeah.
No, I'm just kidding. But
Okay.
no, 750 divided by 12. Hold on.
Yeah.
That's
oh,
not 14. That's more, brother.
oh, I was doing the wrong
No,
math.
we'll try to.
750 divided by 12.
Hmm.
Yeah. So that's a lot of hours. But I was
62.
thinking, like Sheikh G said, maybe the spouse can be like spending that time where she does not have another job, but she's able to be actively involved. I think maybe looking at reports and making decisions, like you said, Sheikh Ji, and also contractors getting
Yeah.
actively involved can deduct then because they're filing jointly. Then
Yes.
she could be the one who is doing 750 hours or more. And then the passive active losses of the hotel can be batted against the W-2 income.
Okay, so this was considered material participation, right?
Yes.
Material participation tests. So, anyways, what are the tests? But so material participation. Okay, I'm looking for the test that you do because that's what you want to do. Test
Yes.
one: you participated for more than 500 hours. This is what it says on this thing. Test
Yes.
two: you acti- your activity substantially constituted all participation. Test three: you participated for more than 100 hours and no less than any other individual. Test
Yes.
four: the activity is significant participation activity and you participated in all of the test five, test six. Anyways, they have 7 tests that I'm looking here.
Yeah.
But anyway, so the point of the matter is you really need to document this and get with a good CPA to make sure you actually are materially participating. Because I think a lot of us throw out these ideas, and when we're not CPAs, listen, guys, this is just education purposes. You're going to need
Yeah.
to meet with a CPA because this is educational. Because we're not attorneys, we're not a
Everybody is
CPA.
different.
Sheik
Yes, we are
is, but you
not.
have to book a call with them. But anyways,
Yes, yes.
so I think people need to be really careful because there's a lot of people on social media and you hear them and they're like, oh, materially participate.
Yeah.
But I'm going to really break down what that means and make sure whenever I'm offsetting something, I'm doing it the right way and making sure I'm documenting it in my little journal that would be
And
considered.
I want to record. Yeah,
Yeah.
I want to record also. I've been doing syndications, and I've never promoted that passive investors can be actively involved in the business. They are not because they just give the money, Sheikh Ji, right, to us, and they're in the syndication. They are limited partners. We are general partners. We do 70-30 split or 80-20 split. So all the losses they get are passive losses. I just wanted to mention, I know some people in the social media say, oh, you can really deduct this and that. Please check with your CPA.
But that is why I think owning a small business is the best tax strategy for somebody that has a
That's what I would
W-2.
think.
Because if you own a business, you own a business. There's you don't have to like materially participate. You own that business. That equipment you buy is equipment you buy. So that's why I became the business ownership coach, because everybody should own a small business. And if you've got money, you should definitely learn tax strategy. But if you're like the average person that makes $100,000 a year living in the Bay Area and you're just getting by, you should own a business because you can pay less in taxes. You can grow your side hustle business to make more money. Then you can become wealthy, and then you can go see Sheikh, right? And then work on your tax strategy. But we got to start with for the people that are aspiring entrepreneurs. They make 100, 200 grand a year. They're just getting by in the Bay Area, right? You make 100 grand a year, you're scraping by in the Bay Area. You need to own a business to create wealth, to start making more earned income, also to help offset some of that W-2 if you do the right strategies. So that's why
I'm really glad you're asking that, Beau. I'd love Sheikh G to kind of expand. I know, Sheikh G, you work with lots of entrepreneurs, right?
Basically, idea is to grow your wealth. So a lot of time, yes, we take this depreciation and all that, but when, let's say, 5 years, 10 years down the road, you have built a lot of equity into it in the business and in the real estate, then you can go, instead of one, let's say, building, you can do 1031 and buy 2 or 3 10 years down the road. So you can roll over 1031 exchange and don't pay anything. You know what I'm saying?
Sure.
So that is, so it's not just, okay, I took the depreciation. When I sell it, oh my God, I have to pay taxes. No. Then 1031 comes in the picture. And
No,
that's
thank you so much. That's a great strategy, Sheikh Ji. I'm glad you brought it up. I know the hotel that Anshu and my partners and we all bought, we were able to 1031. So we kicked the can, I call it. I've seen that. So it's the gains that is able to kick down the road and then down the road, then down the road. Could you give us some idea? Can it be down the road all the way till you die? Some people I've read and some people have said, okay, it just wipes out because if you die and you give it to the heirs, then the what is that? It jumps up to the current value. Step up. Yeah, step up. Can you explain that a little bit, please?
So
That's
step up is, let's say you have a property which your parents bought, and after depreciation and everything else, it's, let's say, $1 million basis at this point. So, but when you die, then let's say it's $5 million at that time. Okay. So your kids will inherit at 5 million.
Correct.
Okay.
Correct.
They can go next day, sell it, no tax.
No taxes at all.
Exactly.
Wow.
Because the $5 million is the value at the time of death.
Yes.
So their basis is not what your basis was originally.
Yeah.
Their basis is at the time of death, new appraised value. And that's
Beautiful.
where you can basically you can strategize that way too. So
Anji.
1031 helps a lot.
It
Oh
does,
yeah.
it does. And lots of people, I was just trying to get some numbers. Is it in trillions? Maybe, I don't know, in real estate, which is in 1031 category. Because lots and lots of rich people, they always keep on buying more and more. And
Yeah.
that way they can defer
You see,
taxes.
you
Yes.
see a lot of time when you are in real estate or other adventures, you don't need money for day-to-day survival.
So true. So
So
true.
you can build the wealth part.
Mhm.
And that's where all these strategies come in. You can always refinance it if you need any money out of it.
Yes, yes.
But your basic purpose is to grow your wealth without paying any taxes.
I
You
love it. What you just said is
know?
so right. Why do we sell the asset is to bring more cash so that
Yes,
we could buy more. But by 1031, you're able to buy another building and
yeah,
then grow value and take the money out, like
yes,
line of credit, line of business, and collateralizing and everything. That
yeah,
does not affect the gain.
So Shiki, you obviously work with a lot of high net worth people, businesses. Don't name names, but give us an example of one of your clients you've worked with for a long time and how they made their fortune and something that impressed you on how they built it, a little bit about
Mm.
their business. Don't go into details, but because you see a lot of inside
yeah,
things on how people grow their wealth. And I'm curious
Mhm.
to,
yeah. No, I mean, I have some clients, who were entrepreneur in high tech industry, and they have say their public sorry company went public, so they made good money.
Yeah.
You know what I'm saying? And then they bought something, and at the same time, let's say they have $10 million capital gain sitting from selling going one of their company public and selling some of their stock. But then they went into these ventures. In the year they became rich technically when they sell their company. So let's
Mhm.
say they sold their company in February, March timeframe, and they made $10 million from there.
Mhm.
And then they have till the year end to invest part of it.
Yes.
And that became what you call it active loss with the depreciation. So let's say it was 3 million. Let's say they bought a hotel for $12 million.
Mhm.
So your first year depreciation give and take is almost 3 million. So out of
Mhm.
your $10 million capital gain, because there are different character of income. One is called portfolio income, which is capital gain income. Then you have passive income, which is from your rentals,
Mhm.
and then you have active income. Active income actually helps you with the capital gain too,
mm.
or active loss for that matter.
FT.
So,
Yeah,
so if I have if I sell a company, I could still use some strategies by taking that and buying a big piece of real estate that same year and depreciating that. Can it help
with
off?
active participation, yes.
Yes.
Special.
See, that's pretty. So
Beautiful.
yeah. So
Significant.
if you're a high tech person, that would be make sense to get into. What other businesses like hotels, because that's active, right?
Yeah,
Uh,
There are some other businesses too, like oil and gas. I know I don't promote that. I've never
yeah.
invested in it, but I've known my friends who have invested and gotten Sheikh G 100% write off. There are
that is correct.
certain like ATM, I heard business or vending businesses because it's all structure or machines, I'm
Yes.
told. And Bitcoin mining was, I mean, another one. People said that you could deduct about 95% because it's all computers or machines. So could you throw some light on that one? Yeah.
No, basically, yeah. So anything which you, as we said, 500 hours, and
Hmm.
you are participating it, as
Hmm.
long as you
Hmm.
don't have anything else going on too, technically. But so if you can justify that, and it's not a rental business, everything else can be active technically.
Hmm.
Yeah. So whatever you do over there, the loss you generate can be offset against capital gain too. What I'm
Right.
saying is active income is pretty desirable for tax
Yes.
situation.
Right. Yeah.
So,
Yeah.
so
Sorry. Go ahead.
yeah, so strategy from a strategy standpoint, if you can be active in the business, owning a hotel versus being a GP in a multifamily, there's
Mhm.
probably more tax advantages for owning the active business than
Yes.
there
Yes.
is the passive multifamily business.
That is correct. Yeah.
Yeah.
That is true. That is true. That is true. And I think, again, we don't want to undermine because so much is going on in syndication and fund business where there are lots of entrepreneurs and investors who don't have the capabilities of finding the right deals and making them happen or get on the loans and then manage those assets. But by investing passively, they're able to accumulate the passive losses and
Yeah.
then back it against the passive gain, which happens in 3 to 5 years in syndication, for example. So that way, they don't end up paying too much taxes. Again, it's everybody's situation is different. I'm not CPA or attorney, but
Yeah.
that's what we find in the syndication world that you're able to make the cash flows and then you're able to also take care of the advantages of the cost segregation, bonus depreciation to some extent.
That is correct. As I mentioned earlier, it all depends on the character of income.
Anji,
So
yeah,
you have to isolate, okay, this is my passive losses, and this is
yes,
my passive income. How do I
yes, yes,
strategize to offset each other and don't pay tax? Build the wealth on
that's
that part. Same thing on
X,
capital gain and capital losses. You can
Anji,
offset
yeah,
each other. At the same time, people, a lot of time we tell them, okay, evaluate your portfolio at the end of the year. See
hmm,
what, if you have a huge capital gain already, let's say $1 million or 500,000, then you
hmm,
are sitting on a portfolio where you have some losing stocks.
yes, get rid of them,
So
yeah,
other
yeah,
than wash sale rule, which is
ah,
30-day, you
Anji,
can strategize, okay, I can sell these things, generate the loss, capital
yeah,
loss.
hmm,
And then if you are so like that stock, after 30 days or 40 days, whatever, you can buy it back.
buy it back, Anji, yeah, yeah,
So you generated the loss technically. And that
excellent.
capital loss can be offset against your capital gain.
I appreciate that. I know a lot of people probably watching us are into diversified assets, and stock market is one of them.
Yeah,
And like I mentioned yesterday, it's so important. It just hit me right away. I need to look at my P&L like
yeah,
every quarter and then
yes,
meet with you. And I think we
yeah,
suggest to lots of entrepreneurs that they should really look at and meet with your CPA and your tax strategist
yeah,
because they could help you save on taxes. They can't help you December 31st
that is correct. Other
when the
thing
whole
I
year
have,
is
yeah, yeah. Other
and
thing I have seen is by nature are either aggressive or non-aggressive. You know what I'm saying? But what I'm educating is basically being active participant in your
yeah,
own building the wealth
sure,
part.
sure,
You know what I'm
sure.
saying? Because sometimes people say, "Oh, this is too aggressive. I don't think it's going to work for me. It's not my nature and all that." But
Hmm.
if you have a second voice telling you, "Okay, it makes sense tax wise,"
Hmm. Yeah,
you
yeah.
know, so then I can convince you, okay, let's do it.
I
But
love it.
yeah, you know what I'm saying? It's just sometimes I run into these things.
Mm,
People, oh my God, I wish I would have talked to you in December, but now it's
yeah,
January. We cannot do anything.
for
But
sure.
a lot of time I can, as I said, I can strategize putting your,
Yes.
okay, this is your passive loss, this is your passive income. How much you have passive losses, how much your passive income, you're going to offset each
Yes.
other. You know what I'm saying? This is your capital gain, this is your capital loss. We can offset against each other. But then there is an active income or active loss, which
Hmm.
kind of helps you in, especially in the capital gain area, as well as against any other active income. So those two are the areas where you can play with a lot.
This is very
Yeah,
important, Sheikh G.
yeah,
We
yeah,
really thank you for coming
yeah,
on the show. This is amazing. I think everybody watching us, listening us, it's so important that we look at not monthly is hard, but
yeah,
quarterly at least to strategize what
yeah,
you're planning to do. I remember
yeah,
hearing from others also, it's good to plan strategies, and
yeah,
that will save thousands and thousands of dollars
exactly.
that particular year. You can't take care of 24. What
Yeah,
happened in 23? We are in, March now, right? April
exactly. Yeah,
15th is coming, and
that is correct.
you know.
Yeah, other part is especially older clients. There are two things. One is called your cash flow. Okay. And
Mhm,
then there is a what you call it tax loss. So in
mhm.
cash flow, you don't factor in depreciation or amortization.
Right.
Saying
Mhm.
that increases your loss for the tax purpose.
Correct.
You know, saying. So yeah, so a lot of time, let's say you have depreciated something and you have paid it off, so you don't have too much interest payment on that property, and then you don't have too much depreciation on it because your base is low.
Yes.
So then I
Yes.
say, okay, go buy a bigger property with less good loan technically. So it gives you
Hmm.
depreciation as well as because the value is pretty high, and then at
Hmm.
the same time your interest payment is high.
Yes.
So then you can wait, let's say, okay, interest rate is going to go down at some point. You can refinance it. But what I'm
Hmm.
saying is for your tax purpose, your cash flow will be okay. But for
Hmm.
tax purpose, you can offset each other and don't pay tax. One
Yes.
positive
Yes.
income, one negative income. Yeah.
Use good leverage. Use
Exactly.
debt to
Yes.
create
Use
wealth.
good
Yes.
debt. Good debt. Yeah. Not
Good.
buying cars and this luxury
Yeah. Yeah.
things, homes, personal residence, but really good assets which cash flow and which have good mortgages on them. It's good debt. Good debt. No,
Yeah.
thank you so much. How can people reach you, Sheikh Ji? I know you
Uh,
are in
yeah.
Sacramento. Yeah.
Yeah.
Uh-huh.
So my I have my cell phone and my office number. Office number is 916-929-0152,
Uh-huh.
and my cell is 510-459-6392. You guys are more than welcome to text me, and
Very good.
yeah, and I can be reached both ways. And then if you want to email me anything, then idreescpa@gmail.com. That's my email address. Or
We'll
Sheikh
put
at,
them in the comments, Sheikh Ji.
yes,
Yeah, no,
okay,
we
sure.
will. We
Yeah,
appreciate that very much for you taking
yeah,
the time and
yeah,
joining us. And I want to
yeah.
thank you publicly for really helping me in our several LLC, CP taxes and K1s. And you're so
Sure.
prompt in your whole department and you provide. I know the website I saw, you have a
Hmm.
beautiful website. We'll put that also.
Okay,
And
thank you.
any message, brother? Yeah, any question? Yeah.
I just think this proves the point. You got to play. You got to get in the game. You got to learn the rules, and you got to
Yeah.
get with the right strategist. And I always tell my brother, I go, man, you make 800-900 grand a year W-2. You have no write-offs. You're getting the worst of the worst, and you're in the financial service business. I'm like, what are you doing? Like, I know he does, he's wealthy now, but man, you
Yeah.
make so much money W-2. Your
Uh-huh.
wife needs to do something. Get in the game. All my friends on the other side that understand these rules, they're the ones that are getting ahead, right? They're the ones that are 2-3xing versus the guy that's not. He's paying 200-300 grand a year in tax, and he has no
Right.
write-offs. Like and he's in financial services. Wake up and do something about that because other people are, and I see it every day, and that's what kind of motivates me. It's like, I know this, you should know this. He's an economics degree, like he's smart.
Yeah. Yeah.
He works with financial planners. Those people don't seem to get it as much as the other people on the real estate side. They
Yeah.
get it. Like, I think that's why real estate people and business owners like hotels, they're the ones that are going to be reaping the rewards going forward. It's my
So
takeaway.
true. I've read and listened and heard from so many people, specialists, real estate, the taxation laws in USA are built for people who own real estate. That is the truth. And businesses,
Right, right.
entrepreneurs. That's why so many people like to do side hustles or businesses, and they are able to then leave well, I don't propose that. W2 job brings the stability and everything, but having that your own ownership of the business is a fantastic way. And if you're paying too many taxes, please wake up and learn about literacy, learn about taxes, and please do reach out to your CPA or Sheikh G, who is
Yeah.
a very accomplished CPA who has been with and Walt Disney too. Sheikh G, you told me one
Yes.
time you
Yeah.
were doing taxes for Walt Disney. I remember that
Yeah.
now.
Yeah. I have worked with them too. Yes. I was a
Yeah.
part of PwC team. Yes.
PwC, and you have
Yeah.
all the strategies and you
Yeah.
have so strong business in the Bay Area. I
That
really
is correct.
appreciate your coming on the show. And thank you
Thank
so
you.
much, G. Huh?
You're welcome.
Thank you.
Thank you.
Thank you.
Okay. Thank you very much.
Thank you. Thank
Thank
you. Beau and I are together to really bring the best to get your business to the next level.
So do me a favor, subscribe and share. I really appreciate it. And I look forward to connecting with you in the future.